Meta produced earnings the other day. Didn't look too bad, but weak as far weak as guidance and a heavy spend on capex, which is going towards the Metaverse. And I mean, I like the Oculus, but I'd like to hear other people's thoughts about what's going on with Meta, and should we be selling it? Should we just write it off as a company now and think it's going to zero?
Yeah, everyone else on YouTube appears to be having a say on Meta, and since we're monetized now, I feel like we should have ours as well. Paul said that Meta produced earnings last week. It barely produced any bloody earnings last week. That was mostly the problem with it. It had 27.7 billion in revenues, which was down about 4.5%. Earnings per share were $1.64, which was down by half compared to this time a year ago. So those earnings are going in the wrong direction. I was saying to Steve when I read this, I'd been buying shares in Meta since about Q4 of last year, so just under a year ago. And it now looks like the opposite to the company that I was buying. So wind us back 3 quarters, I'll remind you what's happening. The shares were dropping quickly because the number of daily active users on Facebook was sliding off just very, very slightly, less than 1%, but the number of daily active users was coming down. Company was making more money than it ever had done. Revenue was going up, earnings per share was going up, average revenue per person was going up. Users on all the other categories they report on were going up. But big panic with daily average users coming down. Okay, back to today for the moment, and things are pretty much the opposite way around. So average users on everything, so Facebook individually and the family of apps in general, daily and monthly, everything's up by between 1% and 6% compared to a year ago. And like I mentioned, all the financial numbers are coming down. So it feels like things are very much the opposite way round to the kind of company that I started off buying, which sort of makes me wonder, should I change my mind on this? I mean, there's lots of kind of bear market, bear points to be made on this sort of thing. I've thought of about 4 so far, which is number 1 is that kids don't use it. Number 2 is they're busy spending money hand over fist on the Metaverse. Number 3 is that family of apps thing that everyone thought was great. The revenues and operating income are well down on those things. And number 4 is that their free cash flow number seems, as far as I can tell, to be wildly misguided. Any thoughts on any of those, or I'll dive into them a bit more if you want?
Yeah, I was going to say, is average revenue per user down? Because I didn't actually look at that one yet.
So I didn't look at it either, but I have in my head an idea that if the number of users is flat and the revenue is down, then the average revenue per user has to be down?
Down, yeah.
That makes sense.
Yeah, so that's the bad one, isn't it? If you're seeing that one flowing down, then it means there's a kink in the business going on. And it's not just a kink, is it? Because it's been 3 regular quarters of declining earnings now, and that is a bit of a shame. The way I look at Meta, and I'm going to try and look at it positively. I'm going to try, is that you might be seeing these earnings going down due to this heavy capex. So do we still see a company in Facebook that is profitable, Facebook, Instagram, that is still profitable, and then we are just taking this yearly, monthly, quarterly fee of around, I think it was 10 billion that they're just smashing into the Metaverse, and we just have to take that as a fine? Or is it more than that? Is it? It's quite considerably more than that, is it? Well, either way, do you just take that cash expense as a massive fine every single time, and then you put in your discounted cash flow exactly what Facebook's earnings are minus that big old expense, and then you come to your price of Facebook or Meta at that time. On another one, anecdotally, again, I think the Metaverse itself, I'm not entirely sure of just yet, but Oculus, I really, really like it. I don't know if you've ever used it, but it is a tremendous product. It really is a tremendous product. The games on the Oculus, I would buy that console over any console out there right now. And if I was going to buy one, that would be the only console that I'd buy. And that's what I think of it as a console. I don't think of it as this kind of workspace feature where you get legs and stuff like that. I don't see that. But the Oculus in a gaming capacity is by far, personally, the best gaming console that's out there.
I think the run rate is at the moment is going to end up being more like 12 billion. I think the issue is a couple of years ago when people were buying into Meta, knowing that Zuckerberg wanted to put this money into Reality Labs. What people didn't realize is that it'd be spending so much money on it, and the progress is actually looking in terms of the actual output of the. I mean, the headsets would discount them for now, but the actual product, the Metaverse itself. For slamming in 4 billion a quarter or whatever it is that they're doing, it still looks really shit. And that's the problem that I think most investors have got with it, is that it's become a joke to the outside world, which is not a good sign for a product. Everybody's laughing at the Metaverse. But the investors can't laugh at it. You know what I mean? They can't laugh at it. They've expected him to turn out something amazing. This is a field he has very little experience in. But he's turning out a product here, which is seen, which people are laughing at. Which that's going to be really difficult for him to come back from. It's quite easy to see where the company's cash and net income is going, because you just look at the Reality Labs division and you see 4 billion hole in those accounts. But that, I think, that's more than what he ever sort of told you he was going to spend, or what you ever could have forecasted he was going to spend. But the opposite, the argument I said to Steve, is that this is another whole different argument, but this is on super voting shares. Now, everybody likes super voting shares when the stock is going up, because everyone's like, this guy's a visionary, he's great. But when he's like sat in the backyard throwing billions of dollars into a trash can and setting it on fire, and then coming out with, hey, look, you've got legs. Like, now nobody likes super voting shares. Like, when the stock is the worst performing stock in the S&P 500, which it just became today, from year to date, who likes super voting shares now? I think if Zuck didn't have the sort of voting power he had, I think he'd be out on his ass at the moment spending this sort of money. But Steve, I'll let you come back.
I wonder about this. So I agree with pretty much all of this, but I think I just feel slightly more positively than you guys do. So I counted back for 12 trailing months, and I counted a 12.7 billion spend on the Metaverse from Reality Labs one way or another. And for context, that's about a Pinterest. For pretty much all of Pinterest market cap. Pinterest market cap is 13. It's also things you could have done with 12.7 billion that are not the Metaverse. Bought Digital Turbine, Globally, Teladoc, Boston Omaha, Daily Journal, PagerDuty, and Squarespace. That's not a choice that Meta had available to it, realistically. I don't think they're going to be allowed to buy all that stuff with various antitrust concerns. But to give you a feel for the kind of money that's been thrown into this currently gaping hole, I think there's a little bit of sentiment sliding the other way here. So to Paul's point, the way I thought about this before was, look, it's got a family of apps thing that is basically a money printing machine. Okay, we're going to chuck some of it onto the other side and we'll just knock that back off the profitable thing. The thing that's happened this quarter, though, is family of apps has got clobbered as well, which we've seen happen with Google, we've seen it happen with Snap, we've seen it happen in digital advertising everywhere. And suddenly, I think, the Reality Labs stuff didn't go well this quarter, but no one really thought this was going to be an amazing quarter for Reality Labs particularly. No. If Family of Apps goes well this quarter, I think Reality Labs is the kind of thing you don't really care about. We've had 3 billion spends in a quarter before. That was, I think that was Q4 of last year. So that by itself isn't a huge deal. What's a huge deal to me, or as far as I can see, is it all looks like it's going wrong together, and I think that's causing everyone to view everything more negatively than they would have individually. So when I look at that, I sort of think, okay, it's a bad time for family of apps. That, to me, looks cyclical. I think it's cyclical with Google. I think it's cyclical with Snap as well. I own both Google and Meta, by the way, and I've no particular... They're roughly similar size positions for me, so I don't really mind which one does better out of those two. I think this is... It feels a little bit Netflixy to me. Feels like everything's going wrong at the same time, and therefore there's a lot of scope for just anything to go right in the future here. It is very genuinely going wrong at the business. I don't think this is just sentiment, right? Free cash flow was awful, and it was, I think, worse than awful. I'll get onto the stuff about stock-based comp in a minute, but I kind of think there's a lot of room for this to turn around quite quickly and quite substantially. So I think this is perhaps... I'd keep buying this here for what it's worth. I own this and I would buy it again at these levels.
It's the risk, isn't it? It's the it's very interesting to see how the stock market. This is a very good example of how the stock market works. We had PEs of got north of 30 when we had a lot of cash flow coming in and no capex. And don't forget that Facebook's still got the opportunity to take out some debt here. I don't know if that would do very well for the stock itself, but
It did.
Oh, did it? Oh, sorry, they're already taken out a bit. The the only thing you've got to think about here is the stock isn't going to change direction until that metaverse starts to prove itself a little bit. So what I think you might find is a long bottom, maybe. That's what it feels like to me. And as of probably yesterday, I think it was like a PE of 9. But it's interesting to see that that's what happens to the market. And I'd like to think of it as a good visual representation of there's the risk. There's that 12 billion a year risk that's going on, where they're just dumping it into a hole. I think it's quite biased to say that they're just dumping it into a trash can, because we actually don't know. I mean, it really could come off. We just don't know, and that's what you're betting on at this point. I think with Meta, if you are buying it, you are speculating on a metaverse, unfortunately, and that's why we've been given a PE of 9. If this was in 2020 and Cathy Wood was pushing it, you would see this thing go through the roof. But it's not. We need cash flows, and we're seeing this capex.
See, I don't think that. I think that you're getting a PE of 9 is essentially what people are saying is Metaverse is almost fully saturated business. You're getting a business there that's probably not going to grow in terms of users anymore, because nearly everybody uses nearly all of the family of apps in one way or another. And you're seeing a business that's out of cycle. So you're seeing a 9 PE there for those two reasons. I don't think today you're betting on Reality Labs being being your bet for growth. What you're getting is a company that theoretically should stay around this price if Reality Labs doesn't take off. There's always a chance that Facebook will be able to make this level of money for a very long period of time. The move away from Facebook to other advertising platforms isn't going to happen overly quickly. But the issue is, I think Zuckerberg, we spoke about this before, he needs a platform in the way that Apple and Google are like walled gardens. He wants his own walled garden, and he's understood that, and this is the way he wants to go about it. Whether or not you think this is the right move or not, I'm not so keen on this move. I'm not so keen on it just because I look at the output, and I think the output looks really bad for the amount of money spent on it. I mean, we laughed at Amazon Prime spending 500 million on something like Lord of the Rings, but at least it didn't look shit. But yeah, I don't know. Steve, I'll defer back to you to wrap us up.
So one last thought on this then, I guess. There's a line of thinking amongst kind of a certain sort of value investor that you run a bunch of numbers through something and this comes out looking very, very cheap. And no argument about that, it does. I think this is one where it's worth looking just very slightly closer for what it's worth. So it's currently trading at a price to free cash flow of around 9. It has a market cap, when I looked earlier, of 237 or so billion. Free cash flows of 26.5. So that's price to free cash flow of 9. When I looked into that free cash flow, I got a little bit more concerned with what I was seeing. So stock-based comp is about 11.39 billion. Which is roughly speaking a metaverse again. And you add that back in free cash flow because it's not a cash expense. So you take your net income, add that back in, add back in a bunch of depreciation amortization costs. That gets you to operating cash flow, and then take capex out of that. So of that 26 billion in free cash flow, roughly 11 and a bit is coming out of stock-based comp there, an expense that's being added back. I think that's a genuine cost. I think if you're printing 11 billions worth of shares, you should account for that in your thinking. So if you take that back out again of the free cash flow, we get closer to a sort of 16, 17 multiple in free cash, which is less attractive than sort of 9 or so. Worse yet, stock-based comp is growing at nearly 30% per year on 4-year average, and revenues was growing at 20.6. Revenues currently coming down. So that's getting eaten away quite quickly. That worries me more than anything to do with the metaverse, for what it's worth. The fact that they cannot stop giving away this damn business concerns me as an investor more than the idea that they're currently taking moonshots at Oculus headsets.
That's the thing, right? It's already has about half the world as its customer, as far as we know. I think Facebook had something like 3.5 billion users, and where's the growth is the question. Where's the growth in that? And it's gone.
That did make me laugh because CNBC said Facebook users at 3.53 billion or something like that, and it said only up 4%. And I'm thinking, when you get to about 3.5 billion, 4% is a lot to add on in terms of users. Like, we're running out of people here who could physically use this.
Yeah, that was it. I was thinking, well, how many of them have water? I was just kind of like, what's going on? It's pretty incredible. And that's the thing. Unless they're gonna, I don't know, just make Instagram even bigger and more profitable. There's no growth there, and this is the only growth prospect. A lot of money's going on it, and it doesn't seem to have a clear direction. I think that's the main problem. Is I really like the Oculus set. I think it's a brilliant product, but a lot of people don't. And if I refer to Scott Galloway says it's not cool. No one's going to stand around in their house with a big thing on their face. It's just one of them things. I personally think, it's probably not cool, but I don't care if I'm traveling around, swinging from trees and being Spider-Man and things like that, which was genuinely one of the most brilliant experiences I've had on a games console ever. However, this metaverse bit, I can't get my head around it. I don't know what it's for. If it's for just having meetings, just put a fucking camera in it and let it see your face or something, like your real face. Why are we? Oh, have we just invented FaceTime or even Riverside, what we're using right now? It doesn't make sense to me at all. But then that could be me getting old and me not understanding the basics of what the young people want these days. I really don't know. I can't get my head around the metaverse, and until it's got a proper direction, I don't think I can buy it because of how much capex it's blowing into the company right there. Stock-based comp, I have no idea. But is it buying back shares at the same time?
That I think that's fair enough. I don't know if you've seen the advert that Meta's currently got running on TV for the Metaverse at the moment, where it shows you the idea of university students going back to ancient Rome to watch like Aurelius arguing with somebody in front of the Colosseum and experiencing debates and things like that. Or it'll go to students learning about cells all through the the metaverse, and the professor throws a cell to them and they can split it and divide it, and you see all that stuff's really cool. When's it coming? And you actually look at the output, and it looks like something like an amateur cartoon maker would make on YouTube, where half the time people don't even have legs, and you think to yourself,
I'll tell you what,
we're so far away from this. I mean, Paul likes. Well, you really like the metaverse because you like playing mini golf with a headset on, but that's not what that's not going to bring in the dollars, is it? Do you know what I mean?
That's there. That cell thing that you're talking about, like delving into the body, that exists. That's a mini game. But what doesn't exist is the 300 headsets that you've got to put into that lecture theatre. The 300 headsets that you've got to give to your students and maintain, and they're going to go get pissed with them, or they're going to go spunking them or something because they're going to get like VR porn or whatever, and it's just
it's not a Tesla.
Don't cut that shit. But that's the problem with that. That's why universities aren't going to until the price comes down, obviously. But then how do they prove the concept if the price isn't already down for universities to spend it on? And I think the technology is there. That technology you're seeing that in that advert is there. There are games, there are visual experiences that look exactly like that, where you literally can dissect a body. I mean, do you remember? I mean, quite funny is that game where you have to be a surgeon. That was quite hard. Quite a hard game actually. It's like playing Operation in VR. It's quite crazy. But what you're talking about there, that does already exist. And probably as good as they have said in the show. But like you say, there's a lot of logistics that they have to sort out with it.